Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Kevin Cook, and my stock is Viavi Solutions, symbol VIAV. Right, here's the quote page for Viavi Solutions, currently a Zacks number 2 rank, and we picked it up last month under $40 and just likes the growth. This is a company in a part of the semiconductor value chain that does testing. So, once NVIDIA designs the chips, TSMC is the foundry where they're made, but nothing really gets done and installed and operational until the testing companies come in and do their stuff. So you can just see on the Zacks pricing consensus chart and surprise chart, look at all those green arrows. Those big green arrows are earnings surprises. But this company has been just, under the radar, unrecognized. But now that some of these testing companies are in vogue and being recognized, institutional investors are coming in. I'm going to show you a few other names in the group that have soared recently. All right. Almost a 13 billion market cap. And let's go over. So in the left-hand menu here, when you're on a Zacks quote page, you have access to all this data. And one of the first places I go after I look at the market cap of a company I'm getting familiar with is the detailed estimates page, because I want to see what its sales growth is like and get an idea of the valuation, price to sales. So 13 billion market cap, growing sales to cross 1.5 billion this year. Their fiscal year ends in June, and that's 39% growth. Gotta like that. I mean, if it's going to trade, but next year still projected 20% growth. Okay, that's good growth when you're trading at over 6 times sales. We'll call it 8 times sales right now for on the 1.5 billion for this fiscal year. What about profits? Yes, look at this return to profit, not return, this surge in profitability, almost 100% EPS growth this fiscal year, projected 30% next year. And the company just reported, we bought before the report and then we added. Let's go to the price chart so you can see how under-recognized and under the radar this company was. You could have bought it in January for under $20. Then this earnings delivered a nice report, beat and raise, and the stock pops. And, then before we know it, we're on our way to 30, got on my radar somewhere in here in March, and we scooped it in the 30s. And then this earnings report, again, the street recognizing what the company does, what its valuation should be, popped it up to 60. And so I think you've got a good shot. We're going to see 60 again at some point going into the summer here. So you're getting it on sale. It had a nice rally yesterday. Chip stocks are just on fire, right? So it was up 7% yesterday, but it's given most of it back today. So filming this on Tuesday, hopefully you're watching this Wednesday and you still have a shot to get in. Let's see what else we want to look at here. Well, let's go to the company website, Viavi Solutions. Okay, here's the Viavi website, introducing one of their new products, but let's just generally look at the business. Viavi is a global leader in test and measurement and optical technologies. So you can see how important they are, and they serve the incredible data center infrastructure build out, but they also serve military, aerospace, railway, and first responder communications. So, they're not totally dependent on data centers. They've got, and look at the expertise they have across sectors and industries. So that's really, really cool to see. So you can learn more about them there. And then I just wanted to show you where I've covered some of these other companies. So my price target for Viavi is 70. And I think we're going to see that pretty quick. Here's my blog on school AI stock investing, where I have a thread covering several of the test and measurement companies. You could just search in the search bar. You could just search Viavi, V-I-A-V, and I also look at Aher, Amcor, Form Factor, Keysight, and Nova. So a lot of good things happening in that space. Let's see. Oh, I wanted to show you something else. So in the left-hand menu here on Zacks.com, you can also get a quick look at analyst price targets and stock forecasts. And we show you a visual map of where Wall Street is on the stock. And then you can scroll down and see what individual analysts have done recently. So what's fascinating is the shift in sentiment. Talked about this earlier. So look where the street is now on Viavi. High price target 70, lowest price target 60, average is 64, 65, and that's from 8 contributing analysts. And you can see who they are. Scroll down here and you can see the recent price target bumps. So this was all after that recent earnings. So coming into May or, late April, after they reported, everybody moves up 63, 65, 70, 60, 65, 66. And what's cool is for my blog, I wrote this on April 7th when we first bought Viavi before they reported the last quarter. And one of the things I did is I took a screen capture of that price target page. Price targets aren't everything to me, but they sometimes to my clients and followers, they are. And so I had to explain that I think the street has this wrong. Here's where the street was in early April. Completely different picture, right? High price target 42, lowest 25. Was trading 30, so it had downside to the average, which was around 30. And, so this is, I love buying stocks like this where you see the growth. You just go to the detailed estimates page on Zacks.com and you can see the sales growth and the earnings growth and that, Wall Street's mispricing something. So, we were buying it at, I don't know, let's say under 6 times sales, at least. And now the street has caught up. So let's, instead of leaving you with the old look of where they are, I leave you with our objective, which is at least 70. I'm going to hold it for a while. Cause I think that the test and measurement companies, they're not a bottleneck like, memory and photonics, but they are essential to this ecosystem build out. And so the more wafer volume that's going through NVIDIA and TSMC and Micron, the more you need your test and measurement companies. Next up is my colleague, Ben Rains, who is the strategist for the Alternative Energy Innovators portfolio.
Thanks, Kevin. Hello, everybody. Ben Rains here for my top stock pick of the week at Zacks. Today, I'm looking at DaVita, which trades on the ticker DVA. DaVita is a dialysis services giant in the U.S. that's expanding its footprint globally. The firm aims to serve patients suffering from chronic kidney disease and beyond. DaVita serves roughly 300,000 patients at over 3,000 outpatient dialysis centers. A bulk of those centers are in the U.S., with roughly then 600 spread across 14 other countries. DVA will benefit from an aging U.S. population and beyond. More specifically, roughly 15% of U.S. adults are estimated to have chronic kidney disease, according to the CDC. Diabetes and high blood pressure are the leading causes of kidney failure. With that in mind, around 1 in 7 American adults has diabetes, and more than 2 in 5 have prediabetes, according to the CDC. Diabetes rates are also soaring outside of the U.S. With this in mind, DaVita stock has crushed its industry and the S&P 500 over the last 25 years, and its valuation levels are very enticing, even though it soared to new highs earlier this month after a strong Q1 report on May 5th. So now we're going to dive into more of DVA on our ZRS system in Zacks.com. Okay, now we are on our ZRS system here looking at DaVita. We can see the stock is up around 3,000% over the last 25 years. This blows away its industry, which is up around 90%. And then we can go to its sector as well, just to give perspective. So the medical sector hasn't been around that long for the Zacks, different than S&P 500 sector. So we'll go here instead to the S&P 500 just to give perspective. So blowing away the S&P 500 in the last 25 years. We'll go to the last 5 years as well. So we can see it's been a little bit of an underperformance for the stock after such a stellar run. But as I mentioned, it's jumped to new highs after that strong Q1 report earlier this month to take out its highs from early 2025. So we can now go over the last year and see the stock has really soared recently. Go just year to date to give a sense. It's up 75% year to date. And as I said, it's trading at brand new all-time highs. We can go back out here and look. So finally broke out there. But I want to do that just to show its valuation levels look pretty impressive for a company that's trading at new all-time highs. It's trading at just 12.2 times forward 12-month earnings. It's traded as high as 22. It's nearly 23 times over the last 25 years, trading at a huge discount to the S&P 500. And we'll go to its industry as well. So despite blowing away its industry over the last 25 years, it's trading at a huge discount as well. So it's a great sign. It's a value pick and a soaring stock that's trading at new all-time highs, up 75% in 2025. Then we'll go ahead and take a look at some of its recent growth and then take a look at its estimates on our ticker page for the company. So we can see it did about 6.5% growth in 2025, about 6% growth in 2024, 5% growth in the top line there. And this is after a little bit of a slowdown in terms of revenue, kind of going sideways for the last few years. But then we can go check out its GAAP earnings. Its GAAP earnings fell a little bit in 2025, but most recently we can go quarterly and show this here to give a sense of what it did in Q1. So 6% revenue growth, and its GAAP earnings up 44%. So impressive growth there. And now we're going to head take over Zacks.com ticker page. We can see that its earnings estimate revisions help it land a Zacks rank number 1, a strong buy here. And then we'll go ahead and so we can see its earnings revisions kind of stagnated for much of 2025, and then they've gone straight up recently. So we'll go ahead and take a look at our detailed estimates page here. So we can see that after that strong, it beat by 19% in the bottom line earlier this month, and its earnings revisions have gone straight up. So it went from $14.16 to $15.07 per share, and a big jump for 2027 as well. So we're calling for 40% adjusted earnings growth in 2026, and then another 22% growth next year, and about 4.5% revenue growth in 2026, and about 4% growth in 2027. And we can go ahead and take a look at its earnings snapshot as well, just to give a more the kind of just what we looked at before, but you can see these estimate revisions are trending in the right direction for DaVita. So certainly worth looking at this stock at the moment, even though it's soared to all-time highs along with the rest of the market. It's trading at deep value levels compared to its historic averages and its industry and the S&P 500 as well. And that does it for me in this episode of Top Stock Picks at Zacks. Please head over to zacks.com/promo page for a look at our services, portfolios, and more.